In today's video, I am going to be comparing Apple versus Microsoft and which stock is better. So let's get down and let's check out these two amazing companies. So first, with Apple, what makes them great? Well, they have a huge product line that, of course, they make a ton of money on. They do pay a dividend, and that dividend is around 0.6% at the time of making this video. From there, I want to look at the average volume, and that is at 77 million shares traded every single day. That's huge. That is going to allow you to get in and out of this stock super easily. Next is the PE ratio, and that's set at 29 at the time of making this video, according to that stock price and, of course, their earnings. Now, when we look at Microsoft stock, they do trade at a lesser volume at 22 million shares per day. Does that really matter, however, considering that it's a $290 stock? I really doubt that anyone watching this video is going to be buying 10 to 15 million shares, so in that case, it's still a super liquid stock, and it really doesn't matter when it comes to the volume, of course, until there's some crazy intraday trading, and we can really play off of that as well, but I'm not going to get into that in today's video. However, there is a higher dividend at 0.76%, so it's slightly better than Apple when it comes to the dividend. However, considering that they're two pretty similar companies in terms of what they do, their PE ratio is actually a bit higher. It's actually cheaper right now to purchase Apple stock, which means that if you are to compare Microsoft versus Apple, over the near term, Apple's stock price should outperform Microsoft, in theory. So just from a top point of view, if you're looking down at these two companies, Microsoft is going to be the one that pays you a bigger dividend, so if you are a dividend investor. However, Apple may have in the near term an outperforming stock versus Microsoft. Now, the two companies are similar and different at the same time, because we have to really look at Microsoft's basically how they make their money. Of course, they're making very similar income streams as Apple when it comes to them selling the Surface versus Apple selling the Apple MacBooks and all of the other whole hardware accessory units that both companies sell. They both sell cloud services as well. And on top of that, when we look at these two companies, there is a slight difference when it comes to Microsoft. Microsoft sells a lot of their software, while Apple will only be selling the higher-end pro-range software like Final Cut. Microsoft will be selling a lot more. They sell their operating system because, of course, there's HP, Compaq, and all these other computer companies that use Windows. And then, of course, we also have Microsoft selling Microsoft Office, which is a scam because now they're going over to a yearly or monthly subscription. And while with Apple, you get Pages and Numbers for free and you don't have to pay for it. So from that standpoint, Microsoft has a few more streams of revenue than Apple does. However, Apple seems to be a better deal when it comes to buying a computer in general, because a lot of the software that you need is already free on the computer. However, let's keep on going on with the stock and see which stock is actually better. When we look at Apple's stock chart over the past 5 years, they've gone from, of course, pre-split, from $25 up to now being worth $150. So that's gone up about 6 times higher over the past 5 years. Meanwhile, Microsoft was at $50 roughly and is now, you might as well say, $300. So again, a 6 times multiple. However, when we look at the chart, we do see less of these massive downturns with Microsoft stock than we do with Apple stock. As we can see here with Apple stock, there's some major downturns versus Microsoft. Microsoft seems to have a straighter line up than Apple. Well, what does this tell us? Well, this actually tells us, even though Apple is a larger company than Microsoft, they do tend to have a lot of good buying opportunities to buy their stock. Meanwhile, with Microsoft stock, they don't have many good buying opportunities to buy their stock. So technically, Microsoft could be a safer bet. However, Apple gives you more opportunities to buy in. Now, why is this really an important fact? Well, if you are contributing, let's say, to the same stock over a period of time, what would you do better with, Microsoft or Apple? Well, technically, if you could get in whenever there's a pullback on Apple, which seems to be quite often, if you can get in on those pullbacks, you'll have a greater chance of making money versus Microsoft. Mainly because Microsoft doesn't make the news as much as Apple. Apple hits the news cycles quite often. They're releasing new products, new updates, and of course, just because they are the largest company in the United States and easily one of the top 3 in the world, they are one of the biggest news stories out there. And because of that, just like how we see with Tesla, they tend to have a lot of pullbacks because of some slightly negative news. That never really pans out. So, Apple could be a fantastic way to invest versus Microsoft if you are looking to do small increments over time. Something else with Apple is the fact that they do increase their dividends quite often, and we see this with Microsoft as well. Now, when we look at Apple stock, we can see that they've had 4 good quarters in a row versus analyst estimates. And when we look at their revenue, they have a steadily growing revenue source. Of course, 2018 was a blowout year. However, in 2020, we are still higher in revenue. However, their earnings seem to be petering out. Meanwhile, with Microsoft, they've had also 4 really good quarters. Their revenue stream is going up, but also their earnings are accelerating with that revenue growth. This could be good and bad at the same time. So why would this be ever bad that your earnings are going up, yet your revenue is also going up, versus Apple, whose revenue is going up, but their earnings are staying the same? Why is that important? Well, let's really take a deeper dive. Which one's really kind of investing more in their own company? One who is keeping their earnings level, or the one that's increasing their earnings? Are they coming up with anything new? That's the question. So, are they padding their money sheet, their bank statements, so that they can purchase companies? Or would you rather have an Apple who is potentially, because if they're making more revenue but not making more earnings, could they be investing in something big? Could they be investing a lot of their money into research and development to create new products to become an even bigger company? For example, the rumored Apple car that apparently they canceled, then brought back, and then canceled again, and then brought back. And I don't know where that story is going. We're going to have to see. However, if a company has growing revenue, they're not necessarily growing dividends hugely. They're just doing minute increases over time, but their earnings are staying the same. To me, that says that they are investing big into their own company. And to me, that means to me that they could be building an even bigger revenue stream. That's my own personal opinions, however. I would love to know your opinions. Leave them down in the comment section below. I hope that this video has helped you. If it has, hit that like button, subscribe. Of course, never trust a random person on the internet, and do your own research. I'll see you guys again next time.